So, depending on which side of the political spectrum you're sitting on, you might either see George Soros as a hero or as a villain, but something that we can all agree on is that the man is clearly very rich and carries quite a bit of influence on the entire world and especially the economy and also the stock market. Well, in today's video, we're going to take a quick look at the top 10 largest holdings in George Soros' stock portfolio, which make up about a third of the entire portfolio. So it's where most of the money is, in those top 10 largest stocks. And of course, in typical all is world fashion, I'll even rank these stocks from best to worst based on my own personal opinion of each one of them. Now, just to give you a little bit of insight on George Soros, he is pretty old at this point. He's about 92 years of age, but of course, he is still one of the richest, most influential people in the world with an estimated net worth above $8 billion. And that's after having donated over $32 billion as charity to the Open Society Foundation, which he himself happens to be the founder and chair of. So no matter how you slice it, he's clearly in charge of a lot of money and a lot of influence. And his stock portfolio in particular is also worth about $6 billion with close to 160 different stocks within it. But again, we'll be taking a look at where the majority of that money is in the top 10 largest holdings of it. So let's not waste any more time. Let's go ahead and take a quick look at each of these stocks. All right, now counting down from smallest to largest in the portfolio, stock number 10 is actually going to be a pretty popular one in Salesforce, ticker symbol CRM, which makes up about 1.5% of the portfolio at over $85 million. Now, this one is one of the original software as a service providers that allows customers to access their platform from anywhere in the world, where they can then offer all kinds of business solutions and services involving customer service, digital marketing and sales, cloud computing, and all kinds of other automation apps and services that basically help the business run more efficiently. For example, their automation services help companies reduce their costs and increase their sales by close to 30% each on average. And with 98% of customers either meeting or exceeding their return on investment goals, CRM has been a very popular choice to partner with. The result has been strong revenue growth over the years, but coming off of the weaker demand following the pandemic, profits have actually been falling as of late, which is also leaving their sales flat this year before returning to double-digit growth expected next year. I still think it's a good enough stock for most people to own though, as the stock is currently down over 30% from the top, leaving them with a pretty good PEG ratio that is almost 30% cheaper than the sector. And whenever the economy does start to improve, I would think that Salesforce could become a high flyer once again. However, it's already up over 50% this year at a time when the economy is still looking very bad, and so it's a little hard to tell when exactly would be a good time to buy. I'll just give it a middle ranking for now at number 5 and see what else is on this list before moving it further up or down, depending on what we see here. Next up though, at stock number 9 is going to be Liberty Broadband, ticker symbol LBRDK, which makes up 1.8% of the portfolio at over $106 million. Now, this is actually the holding company that owns big stakes in Charter Communications and Time Warner Cable, which currently makes them the second largest cable TV company in America, with also a very large presence in internet broadband as well. But as big as they are, I've just never had much interest in owning them myself. First of all, they're super hard to follow, with only 2 analysts on Yahoo Finance even covering the stock. For context, the last stock we looked at had over 40 analysts, and even these ones are only expecting flat sales this year after having already declined the year before. My guess is that the stock rose after merging with CGI, and because of all the people that were at home watching cable TV during the pandemic and using the internet, but the stock is now crashing and the whole cord cutting movement doesn't look good for their future outlook as well, in my opinion. It's not a horrible stock, as they're at least cheap with a PE ratio of only 12, but why own this, which doesn't even pay a dividend, when you could get just as good exposure to internet and similar markets with Verizon, who actually pays you a 7% dividend. And again, I just can't stand stocks that get such little coverage. I actually tried Googling a bunch of stuff on this one, and most results were outdated by several years, which to me makes it almost uninvestable just because of the headache it would give me trying to keep up with them. So I'm ranking it very low. It's going in the number 10 spot for now. All right, moving on to stock number 8, though, we have Bolero Corp, ticker symbol BOL, BOWL, which Soros owns over $109 million of at close to 2% of his portfolio. And as the name implies, this is actually the world's largest bowling company with popular brands including AMF, PBA, Bowlmore Lanes, and Bolero, which together make up over 300 bowling centers across North America, with also a very large presence in professional bowling tournaments and competitions, as well as the TV broadcasting of those bowling events. As you would expect, though, the lockdowns from the pandemic caused them to lose money on the bottom line for years, with also plummeting sales. However, coming out of the pandemic, they've seen huge growth in demand, which helped them grow even larger than their pre-pandemic size, and they're still expected to grow by around a double-digit percent in the coming years as well. They are even now generating more adjusted EBITDA than ever before too. Still, the valuation is a little rich for the rate of growth, as their price to sales ratio above 3 is more than 150% more expensive than the sector. And while the stock is up over 30% since IPOing recently in 2021, it's still a bit volatile and hard to predict where exactly it's heading in the future. I do like their business, and I think it's an interesting turnaround play coming off of the pandemic, but the valuation is just too high at these levels. So I see it as more of a speculative play than anything else, and I'll put them in the number 6 spot for now because I do like Salesforce quite a bit more. Coming in at stock number 7, though, it's going to be a bit of a weird one here in the machinery company Ultra Motion Corp, ticker symbol AIMC, which he owns almost $120 million of at over 2% of the portfolio. And the reason I say it's weird is because this was a brand new addition to his portfolio in the fourth quarter of last year, where he apparently got an average price of $46 a share according to this website. Now, that might just be an estimation, it might not be accurate, but if it is, then it would be a little weird because it just so happens that another machinery company called Regal Rexnord announced right around that same time that they are acquiring Ultra for $62 a share, which is significantly higher. Now, I don't have any kind of way of knowing the exact days that Soros made any of these purchases, but I believe that Ultra stock shot up immediately following that announcement. So either Soros got lucky or had some kind of insider information, or maybe he just bought the stock right after the announcement. I can't really speculate on that, but either way, it looks like the deal went through last month and nothing comes up when I enter the ticker symbol on Yahoo Finance, so I'll just put this one at the bottom at number 10 since it doesn't even exist anymore as a separate stock, and I'm guessing Soros was only trying to make a quick profit off of the acquisition anyway. And I'll move Liberty up one spot just to fit it in. Moving on to stock number 6, though, that's going to be Aramark, ticker symbol ARMK, which Soros owns almost $140 million of and is worth about 2.4% of the portfolio. Now, this is a food and uniform services company that basically provides food, uniforms, and all kinds of other facilities and hospitality related services to schools, universities, hospitals, construction sites, all kinds of different institutions, and even catering special events and so on. As you would expect, though, the pandemic crushed them with multiple years of decline and a loss on the bottom line because of things being closed down or shut down. Coming out of it, though, last year was a strong rebound to record high sales and a return to profitability, with another 13% revenue growth expected this year. That's very strong, before returning to the typical single-digit growth you would expect from a relatively boring company like this in the year after. I mean, they're not going to do anything crazy innovative. It's just kind of the same type of services year after year, so you wouldn't normally see too high growth. Valuation-wise, though, the stock has been pretty slow moving over the past decade, with a surprising amount of volatility, especially during the pandemic. And while they do pay a small dividend, it's only a 1% yield at a time when we have record high inflation, so it's not very compelling. Instead, you'll have to play this one more so for the stock price appreciation, but at a PE ratio already above 21, I'm just not sure how much more room it has to run. Granted, it should come down when profits return. That's probably why the price to sales ratio is so low at just 0.5. But even then, I just don't find this company all that interesting enough to wait around and see. I think Salesforce and even Bolero are much more interesting, so I'll put Aramark right behind them at number 7. To be honest though, most stocks so far have been pretty boring to me. But thankfully, stock number 5 is actually going to be one of my absolute favorites in the entire market. And that is, of course, the tech giant Google, ticker symbol GOOGL, which Soros owns over $150 million of and is worth over 2.6% of the portfolio. And yeah, this one is an absolute no-brainer. Google is insanely dominant in virtually all aspects of internet technology, with market leadership in so many areas, leading to gigantic financials on both the top and bottom line, doing a mind-blowing close to $300 billion in sales just last year alone. And yet I actually think that they still have a lot of future potential left in the tank, especially in developing a family of smartphone related products similar to Apple, as they are now selling a regular Pixel smartphone, a Pro version, a budget version, a foldable version, a Pixel tablet, Pixel earbuds, and even a Pixel smartwatch. Granted, they'll probably never sell as many units as Apple, but considering Apple is the largest public company in the world, even trying to do just a small version of what they do could still be a significant growth driver for them in the future. Of course, not to mention all the other work they're doing with artificial intelligence and many other things. And yet, despite the stock recently soaring by over 30% this year, it's still experiencing a pretty large dip overall, currently down over 20% from the top, with a PEG ratio that is actually cheaper than the sector. Obviously, it was a lot more attractive when it was recently trading for less than $100 a share, and I was putting out tons of videos screaming about how cheap it was. But even here, I still like it a lot, and it easily gets the number 1 ranking. Coming in at stock number 4 though, that'll be the large bank and finance company First Horizon Corporation, ticker symbol FHN, which Soros owns over $200 million of at just over 3.5% of the portfolio, and was actually a brand new purchase last quarter. However, it's a little hard to know if Soros still owns the stock today because a lot of stuff has happened to the company over the past month. Now, if you've never heard of them, this is actually the 40th largest bank in America, and what's interesting is that TD, which is the second largest lender in Canada, was actually set to acquire First Horizon with the announcement made in early 2022. Well, the following year, a few banks started going under, and TD shareholders started to protest the acquisition and urge the company to back out of the deal altogether. Well, it just so happens that earlier this month, TD did exactly that. However, in the press release, they stated that it had nothing to do with the banking crisis, but rather it was because of regulatory approval taking too long, and they were just kind of tired of waiting around for it. Personally, I don't buy that excuse myself, but either way, TD agreed to pay over $200 million in fines to First Horizon for backing out of the deal. And so, when you look at First Horizon stock, you can see all that volatility that you would expect, with it soaring at the time of the acquisition being announced. Then it later crashed into the ground when TD backed out of it, and now you're left with the stock trading for one of the lowest prices in the past decade. And I actually think the stock looks a little attractive here, with a PE ratio below 10, a huge dividend yield above 6%, some pretty decent financials, and a share price well below analyst price targets. However, in this economic environment, during an alleged banking crisis, I'm only willing to touch the absolute largest, safest banks out there. So there's just no way that I would consider picking up the 40th ranked bank right now. Nothing personal against them. Like I said, it actually looks like it might be a good deal here, but I'm just not looking for that kind of risk and uncertainty. So it's going at number 8 for now, just ahead of Liberty. Alright, guys, we are now breaking into the top three final stocks, and coming in at number three is actually going to be an iShares Corporate Bonds ETF with the ticker symbol LQD. And Soros owns $250 million worth of this one at over 4% of the portfolio. Now, iShares are of course owned by the giant BlackRock, and like I said, this is an investment grade corporate bonds ETF, which, unless you're a large institutional investor, this is probably the only way that you're going to be able to get exposure to them. Whether you want to go that route, though, is really up to you. Right now, in this environment, I would say that your biggest risk factors with corporate bonds are going to be liquidity, interest rates, and possible defaulting. And in my opinion, these risks are a bit higher than I would like them to be right now, so it's not an ETF that I plan on picking up myself, even though it's trading much lower than normal with a pretty good dividend yield above 3% right now, which is also well above the average for ETFs. So, while I can understand value investors giving it a shot here, I'm still ranking it pretty low at number 7 since I'm just not that interested in it myself, and I'll move the other stocks up one spot to fit it in. Moving on to stock number 2, though, we actually have an electric vehicle company, except it's not Tesla. In fact, it is the Amazon-backed Rivian, ticker symbol RIVN, which Soros has slowly been unloading some shares of the stock in recent quarters, and he is still down over 80% on his overall position, which shows just how much this stock has been crashing as of late. But he still owns over $260 million worth at close to 5% of his overall portfolio. Now, Rivian is an interesting stock. Like I said, it's been crashing a lot, falling around 90% since their IPO, and the financials have just been terrible, losing more than 4 times their sales on the bottom line last year. Still, Rivian does actually have some promise for the future, especially given that Amazon is a major shareholder. But even there, their relationship has been a bit rocky lately, with Rivian even trying to get out of exclusivity deals and Amazon being pressured to sell the stock after it caused them to report a loss on their net income last year. So to me, it kind of looks like both parties are not too happy at the moment. I also wonder how sustainable Rivian is at their currently high prices of $83,000 on average, their average selling price for their vehicles, which can easily top $100,000 depending on the options you get. And while Rivian certainly has a ton of room to grow in the giant EV market, which is illustrated by the over 100% revenue growth expected this year, their profits are still in really bad shape, with an average decrease of 25% on EPS expected over the next 5 years. That's pretty bad. Valuation wise, a PS ratio above 8 is not too horrible, I guess, considering the high growth. But if you really want a speculative EV startup, I just think that NIO is more attractive at a PS of around 2, and they actually have much better financials and are even expecting to reach profitability this year. Of course, I still think that Tesla is the best of all, but I'm just throwing ideas around. Anyway, I'm not the biggest fan of Rivian. I think it's okay if you're looking for a turnaround spec play, but I still think there are much safer options out there. So it's going to be ranked pretty low here for me. I'll put them at number 7 for now, and I'll move the others up one spot to fit it in. And finally, guys, that'll leave us with the number 1 largest stock in the portfolio, and that's going to actually be a brand new addition to it in Horizon Therapeutics, ticker symbol HZNP, which Soros bought over $300 million of in the last reported quarter. However, this looks to be yet another short-term acquisition play by Soros, as it was announced right around the time that Soros purchased the stock that Amgen would be acquiring Horizon for over $13 billion at an individual share price of $116.50. Since then, the stock has of course skyrocketed up close to that price, now trading for near a record high of $112. Time will tell if the acquisition gets fully approved by regulators, as there has actually been some drama behind it, but most recently, Seeking Alpha did state that the deal is expected to close later this month, with employees even being notified already to expect the same thing. I guess it's a fair short-term bet. You would probably get around 4% gains on it later this month, but at that small of a profit, I'm just not all that interested in taking that bet myself, so I'll put it pretty low here at number 9, only above the non-existent Ultra, and move the others up one spot to fit it in. But that'll do it, guys. I have the stocks ranked here as Google at number 1, which is the clear best overall stock, is really the only one I like on here. And then I kind of like Salesforce and Bolero right below it, even though they only rank that high by default because I had to move them up so much to fit the other stocks. And then the rest on the list, I'm just not a big fan of really at all. So overall, I'm just not a big fan of George Soros' investing strategy. To me, it kind of feels like he's more so just using his massive wealth to be able to make short-term bets that the rest of us probably wouldn't do because we wouldn't be able to take on that kind of risk, and it probably wouldn't be worth it for the limited gains that we would likely see. So it's not the portfolio that I would typically expect to see from a long-term minded investor like myself, and thus I'm not very attracted to it. The only stocks I kind of like on here, for sure Google, and then maybe Salesforce, but that's about it. I don't think I'd own really any other stock on here. So not a big fan of it myself, but I'd love to hear what you have to say. That's just my opinion. What do you think about this portfolio or these stocks? Leave your thoughts and comments down below. And thank you for watching the video. If you want to support the channel, just hit that like button, subscribe. And if you want to go above and beyond, there's a Patreon link down below where you can do exactly that. But thank you so much for everything, guys. I hope you're all doing well, and I will catch you in the next video, my friends. Take care, everybody. Bye-bye.